And I did run that on myself because I wanted to know, especially the
Yeah.
span that I paid for it. And my numbers, and I tell all my clients just in transparency, I spent about $52,000 on my premiums from age 29 to 54. My benefit coming back to me from 54 to 65 will be $650,000 tax free.
This is Better Wealth with Caleb Williams. Hey everyone, welcome back to another episode of the Better Wealth podcast. In today's interview, I sit down with Heidi Peters, and Heidi actually reached out to us a couple months ago after hearing me speak and actually listening to the podcast. And she was so fired up about what we teach, intentional living, one life. And she is extremely passionate about disability insurance, which is another way to think about disability insurance is income protection. So often we do all this planning. We protect our home, we protect our cars, we potentially even protect our life with life insurance, and we build this wealth plan. But that wealth plan is built around us working, us bringing in income, and so often we're not insuring the income itself. And so we just have a conversation around that. And Heidi has an incredible story of actually being a beneficiary of this, and she is super transparent with what she paid, what she got, some of the things to look out for. And I just find it just a very, very powerful conversation. So if you want to learn more about income protection, disability, if you want to actually say like, hey, I should probably talk to someone about this, you can go to betterwealth.com/income protection. That's betterwealth.com/income protection. And you can talk to somebody on my team that can have the conversation and see if one of these policies and plans are something that you should have in your life. Without further ado, here's Heidi. Heidi, welcome to the Better Wealth podcast.
Well, thank you for having me.
So we met a couple months ago. I had the opportunity to speak in front of a group that you were in. This is this year, so it's virtually. And we were talking. I was talking a little bit about the and asset, talking about control, talking about you being your greatest asset, talking about being efficient, and also making sure that everything's protected. And I think what made our relationship sprout from there is you are incredibly passionate about income protection, disability, and what a lot of people would say is, "Yikes! Like that doesn't sound fun at all." But you have when I heard your story and when I heard a lot about your background and what you actually do, I said, not only do I agree, not only at Better Wealth we're like right there with you, but I just thought you have such a unique experience, and I thought it would be really beneficial to have you on the show to share your story, but then also share kind of your insights as it relates to protecting your income and yourself so that you can continue to grow wealth and become your greatest asset. And so with that intro, how are you doing today? And I would love for our listeners to get a little bit of backstory on who you are and what makes you be the person you are today.
Well, thanks for asking, Caleb. I guess I'm very passionate about this topic, number one, because I've been living it myself, but it started way before my own story. I'm a farm kid from Montana who was raised in a family of have-nots. My father was very much against all insurance, and we lived the consequences of that. No crop insurance, no medical insurance, blah, blah, blah. So it came to light early on. My first phone call from my father, I was 18 years old, and he had called me to tell me to come to town because my mother was having a massive heart attack. She is 38 years old. So I can tell you that things can happen sooner than what we think. And we were medically devastated. She couldn't work. Of course, my dad had to take a ton of time off. So we never recovered from that. When I went into college and I went into the healthcare field because I wanted to help prevent some of those things that could have been prevented in my family. It really tied together the struggle with money with the struggle with health. And so when I heard about that, there's actually an opportunity to insure your wages, that was a concept I'd never heard of. And since I lived in fear and fear of no money, I jumped on it right away when I was 29 years old. So fast forward to 2018, after 37 years in dentistry, I experienced my own career-ending injury on a non-dominant hand. And I can tell you, your money is attached to every part of your life.
Yeah.
And I am thankful, Caleb, that every month my dental hygiene wages are put into my checking account. And it's afforded me throughout these years. I did start my own company in 2004, and I was only working with dental hygienists to help them secure a quality plan. Because I don't know if you've gone out and read, as you say, it's boring to look at disability plans, but the contract's very important.
Yep.
I speak both languages. So I've hung out in the dental space and in the insurance space to help professionals, find a quality plan. Because I'm telling you, if the language isn't correct, you're going to be surprised in a negative way if you need your policy. So
Yep.
I'm passionate about helping, especially healthcare providers, go out and find that plan. They don't have time. That's not their wheelhouse. They're out saving the world. And right now during COVID, as we all know, they're on the front line. They need help from us in our industry to help them make wise financial decisions.
Yeah. Yeah, absolutely. And in this conversation, I would love to be able to pick your brain about the things to look for, and because again, I think disability, it's again one of those things. If you don't study it, there's so many things you might not even consider, but there's a lot of important things about contracts. I know that I spoke about the and asset before hearing my talk. Did you have any, like, what are your thoughts about the and asset? Do you use that type of plan or overfund any kind of life insurance in your practice?
I actually have done 2 of them. And so when I heard you, what I can say about what you've brought to the table is that you speak a language that my entire market can understand. Because I know when I transferred into full planning with some senior advisors, the words that are used in this industry to explain the and asset was so complicated. And I can say from my point of view that if I don't understand it, I'm going to say no.
Yeah.
It's going to sound too good. And when I heard you speak, of course, I went out and got your book. And so my clients are offered that. I got on your podcast. That's how I called you, because you're my running partner when I exercise. And you had brought up disability. And I was like, oh my gosh, I got to talk to him about how that's tied in. Because I'm tying in what you have.
Yep.
Because I work in a space of healthcare providers, which, if you're a physician and a dentist, they need to find a space to park money in a safe area that is certain. And working with predominantly female clients, one of the big things for us is the word certainty.
Yep.
And the and asset is very certain. So I have 2 policies thus far. I'm working with my kids to get theirs set up for college funding, things like that also. So thank you for bringing normal words to a big topic so we can all apply it to our normal lives.
Yeah, well, that's what happens when someone who's not that smart finds something really powerful and then quote unquote dumbs it down so that majority of people can understand it. And so it's cool to think big picture, and that's what we're going to do through this conversation. So, in summary of your story, you grew up, you saw the negative effects of people that weren't properly protected. You got into the health space, which is you were a dentist, hygienist, and then you worked there for many years, and then you had an injury to your thumb, which allowed you to no longer practice. And because you had disability, I'm sure you don't get 100% of what you were making, but you get a chunk of that that's going to pay till a certain time. Did I kind of summarize that?
You did.
Okay. So let's talk about for the person that's never heard of income protection or disability. Let's give a overarching what is it? How do you talk about it? Let's dumb it down like I try to do with the and asset, because I think it's because I'm telling you, if you're listening to this and you buy into you being your greatest asset and the majority of your financial model is built around income coming in and you haven't insured that, take notes, because whether you're working with someone like us, someone like Heidi, or someone like maybe a financial advisor sent you this podcast, it's incredibly important that you get the right income protection because your whole financial plan and model could get blown up on losing a thumb or something very minor. So break it down for our audience.
So what I start with, especially on my new graduates that are coming out of school, number one, they haven't even considered what are they as an asset. So
Yeah.
I just run a wealth building calculator. Let's say out here in Washington State, a lot of these new graduates are getting out of school. They're going to make on the west side around Seattle, they're starting out at $55 an hour. And they've never run the analogy, just take that times 36 hours. And most of the contracts, if they're in their 20s, we're insuring over $3 million. They will always tell me it'll be a house they buy. No, never. And how are you going to pay for the house? So I run that calculation. I let them sit with that big, beautiful number and go, wow, yeah. Because what typically happens when professionals or anybody looks at disability insurance, the only thing their eye goes to is how much is the premium.
Yep.
And what's that going to matter? And even with the young people, we start with, what are we insuring? It is your paycheck. They always get it confused with it's their body. And I got to say, I did the same thing. When you say disability insurance, I thought we were insuring ourselves from the disability.
Yeah.
Yeah.
So
like I had to be in a
C.
wheelchair or a
Yeah.
traction.
Yeah.
And we all assume that, our health insurance is going to cover. Yeah, that might cover the hospital stuff. And then I thought that the government would cover me. We pay into L&I or workman's comp. They're going to cover me. Well, we can all look at the statistics there and have that conversation, or Social Security. I mean, it's very rare you're going to get it, and they're definitely not going to cover you. In my instance, I'm covered till I'm 65. My new graduates, young people, I insure them till age 67 if we can get it. So we just start there. What is it? How much are we insuring? And then I walk them through some scenarios. I think it's powerful to tell the story. And now that I've been doing this for so long, there's so many stories I can share with them, not just myself, because it can be anything. And they don't think it might be a thumb. It might just be a simple injury. And I have a hygienist. She worked less than a year and she amputated her right index finger. And she was just riding her bike. She was up in the mountains and her chain made a weird noise and she jumped off and she just went to touch it. And the pedal slammed backwards and there went her index finger.
Yeah.
She'll never be a hygienist again. And she's going to be paid 60 to 65% of her gross tax-free until she's 67 years old. So she is a big advocate of it. I just start there is what are we insuring and why?
So taking you back, you first look at people's lifetime income potential. That's where the 3 million comes in on that. So that's extremely powerful because majority of people, you might not think of yourself as a millionaire, but you are going to make way more than $1 million, far greater than that, quite frankly, over your lifetime. And so you look at that and say, okay, that's based on you being a greatest asset and working. Let's be frank. Like that's what's happening. And so that's conversation number one. Then it's, I 100% agree with you as it relates to disability. It's such a terrible name, like disability. Like it's hard to even know what that is, but income insurance is maybe a better word. It's
exactly. Paycheck, income.
Right. And the way that I've explained it to people is, would you be willing to give a couple percentage bases from your salary today to ensure 60 to 65% of your money, in this case, the person that, had that horrible accident, of course she's going to be a big fan of this insurance protection because it's going to show up powerfully for many, many years. And so is that what's the typical price premium? Because I do agree a lot of people look at the cost, but when it comes to risk management, if you can eliminate one of the biggest risk and losing an income, that could be great. And I'll just say one other thing. In my conversation with Jeremy, and you mentioned it, Better Off Dead, a lot of times when we're helping people do financial planning and they might have proper life insurance, but there's nothing there that addresses like what if something happens to, like what if something happens, chronic illness or an accident happens and you're not able to make your income. There needs to be some conversations there of like you're stuck because you don't have a death benefit, but you have no income.
Yes, and that's exactly my family with my mom's story is, as painful as that comment is, I loved Jeremy's comment because it gives you that little pain point. And when you have to look at an injury like that in a family and think, oh my gosh, we would have been financially better had they passed away. You don't want that to happen. And that just brings on guilt and everything else. So having myself protected, with my market, especially being women, I think predominantly they have three fears about money. And I don't care if they're stay-at-home moms right now, or they're continuing in their profession, or they're getting near retirement. We all worry, are we going to have to go on a budget? Are we going to become a burden to our kids, our family? And then how do we get started on the financial planning? So your question about how much does it cost, of course, it's based on your age. So the longer you wait, and I get those calls all the time, they're starting to have some issues, their body's starting to talk to them, or, what if, the what ifs, and then they're shocked at how much it is. So it doesn't save you money to wait until you're 40 years old. So based on income, and it's based on how much are we insuring, and it's based on your occupation. So just like Jeremy had said, there are occupations that aren't insurable. And it's unfortunate, but that's just the way it is. My dad wouldn't have gotten it as a farmer. My mom was just a clerical worker, so she wouldn't have had that option to do that. But if you can, the hygienists, where we don't fall in a great category. Nobody really wants to insure a dental hygienist. We're one of the highest risk groups for filing claims. And now, thanks to COVID, we've been out on Facebook as the #1 riskiest profession. So I'm finding it extremely hard to find companies that will take us. But just say if they're getting out at $80,000 and they're in their mid-20s, they should expect to pay $180 to $230 a month to
Okay.
insure that income.
But so if you take that out, let's just say, let's say it's a little like 3% of your salary, and you're usually insuring 60% of that salary.
Correct.
And is that increase with inflation, or is it very much of a flat deal?
Depends on the company. So right now, we don't have a lot of companies. So I almost have to, when I go through the riders, the features that you
Yeah.
can add to a plan, bells and whistles, however you want to describe them. Right now, I'm having to weigh, would they rather have an own occupation plan? And just own occupation for all of you that are listening, meaning that if I cannot do dental hygiene because of this left thumb, and I've been deemed disabled, my new job, my new career, any income I have from this is not coming against my benefit. Most hygienists want the own occupation if they can, because we do know we file a lot of claims, and we would want to be able to go out and create a new career and not have that new income come against us. That plan that I use for us for that, it does not have cost of living.
Hmm.
The other plan that I use has a beautiful cost of living, but it's modified. So if you want to go, if you're healthy enough to go have a second career, those new wages are going to come against your benefit.
Got
So
it.
I have the conversation, what makes more sense to them?
Yeah.
Most people really feel that if they can't do this profession, they'll probably be healthy enough to do something else.
Yeah. Yeah, it's like you're a perfect example of that. Yeah, you're not able to, clean teeth, but you're able to help other people with setting up DI and other things. And so what I would like to do, and then we'll see if this is possible, but could we break down some key areas that, like, you talked about ONOC, and it's like, okay, we know what that is, but could we break down some certain, like, things that if you are in the market of trying to get this right, what needs to be in place? Because I know when it comes to whole life insurance, for example, I cringe inside because I see so many places where people go astray. And so if I would, there's a lot of things that need to be checked. When it comes to disability and someone wants to have the conversation, how would you walk them through finding the right company and all this? And obviously we won't need to mention companies, but like, what is the process of things that someone should know? And the reason why I want this on the podcast is so someone that have it as a resource as they're in the market to work with somebody.
Number one, I'd say work with a broker, somebody who can actually go shopping for you.
Yeah.
because if you pick a captured agent, that's what you got. And I just wouldn't go that direction. That's number one. I would want them to find a financially secure company, because these are long-term contracts, just like your and asset. You want to make sure that they're around for your entire career, or until you retire. Of course, own occupation, that is like top of mind. Residual, if I can get everybody and anybody residual, so that we don't have to wait till we lose our total career. There's so many things that can happen that reduce our hours. And so I would want that looked at. What does that say? Is it 20%? And then you got to get into the weeds, and hopefully you have a agent, a financial advisor who will go through that. What triggers that event? Is it that you're losing duties? Are you losing time? Are you losing money? Is it a combination? Because in that language, it's going to be how strong is that contract for you. In dentistry, in medicine, a lot of times we don't lose our career totally. We just end up having an injury or an illness. Something happens that's causing us not to produce what we normally produce. I did the same. I had to work part-time for almost a year before my thumb took me out. So that's important. I would love cost of living, and of course for the occupations that allow it, the physicians, engineers, all of those professions, they all can find a good contract with cost of living.
Got it.
Because that's huge. For me, I didn't become disabled till I was 54, and my contract's going to pay me till I'm 65, but my benefit is not going to change. I did not get cost of living, and I got to say, I didn't understand it when it was presented to me. I thought cost of living was that in my occupation we get cost of living. Dentistry doesn't pay you an increase in cost of living, very rarely. So I thought, what do I need that for? I wasn't getting that it's the benefit that if I'm getting paid is going to go up with inflation.
And what I'm hearing from you is this is really customized. I mean, it depends on what profession you get, because it's like each profession, like chiropractors, I think have a hard time getting disability. I think they're one of the toughest groups to get disability on. And then so you not only need to know how different companies match up there, and that's why having a broker, someone independent that can shop out multiple companies is really key. But then also them being able to say, the goal is not necessarily to get the cheapest. That should definitely be on the spectrum, but it's like, what is, if you're actually going to protect your income, and when you're looking at the whole model, what is the best thing to help you accomplish a result? And it is tough, because your hope is that you never need to use it. But that's my struggle with this. And I think that's where a lot of people get caught up, is they go, it's like, I never want to use it. It's kind of like putting money, down the drain, but it goes to one of those things. Why do you insure your car? Why do you insure your home? Why do you?
And I did run that on myself, because I wanted to know, especially the span that I paid for it. And my numbers, and I tell all my clients just in transparency, I spent about $52,000 on my premiums from age 29 to 54. My benefit coming back to me from 54 to 65 will be $650,000 tax-free. So was that an investment? And how would I have recouped that in my business into my home? And what if I would have been so sick that I couldn't have? And it would have caused me to run my business differently, because I would have had to focus on bringing in the money versus how do I want to establish this new career the way I want, partner up with joint partners that make sense to me. I have the ability to do that because of my income is still there.
So when it comes to, a physician, when it comes to someone like yourself, like obviously it's very clear that you can't do that anymore. How do you tell, like for someone like myself, someone like a CEO of a company, what about a business owner who's running a small mom and pop shop? A real estate investor, like how do you approach those? Because I would like to say that unless I'm on a deathbed, I would still be able to contribute. It's very arbitrary. You know what I'm saying? It's like, doing this. So how does that translate? And the other thing that I want to say is chronic illness. And we all know someone that's had cancer. We all know someone that's like got this disease, and there some of the cases are super healthy person. So it's not just like you're gonna break your thumb or you're going to do a jump on the skis and like, get super hurt. A lot of times you can get knocked out with a chronic illness.
Exactly, and that's why in the contract, the residual part, because just like you can't picture yourself being so ill that you can't just lay in bed and still do a lot of what you do and run your companies, but, you get something that is fibromyalgia, you get something that's Parkinson's, you get something like that, that you may not lose your career, you may not have to shut down your business, but you may not be able to function as you function. So that's why in the contract, do you have to lose your skills? Do you have to lose your time? Do you have to lose, what is triggering that event? I mean, we have
Yeah,
many physicians that they may not even lose money. They just can't be a surgeon anymore,
yeah,
but maybe they can do research, but they've lost that skill of being a surgeon. So you would want that to be replaced if at all possible. So it is hard when people can't put themselves in that position and they
yeah.
think that they are throwing their money away.
If you were talking to someone like me, what would you consider a disability?
Wow. I was just having this conversation with someone who hadn't, we were talking about the mental nervous part because mental nervous is a huge thing that is excluding a lot of people from getting, because, it's very easy to get antidepressants, anxiety,
Yeah,
and we're in COVID right now.
yeah,
Mental health is huge. People don't, they don't remember that that can take you out of your job. And I had to walk her through the position because her thing was she's religious, she doesn't drink, and she doesn't smoke, and she doesn't take drugs. So she doesn't need mental nervous. And we're walking through, well, what happens if you have an event that causes you post-traumatic stress? And that can be anything. You could be in a car accident. You may not be, totally injured,
yeah,
locked up in bed or something, but you may not be functioning as you could. There's
yeah,
lots of events that happen like that.
yeah,
For me, if a patient went into anaphylactic shock, I'm telling you, I don't know if I'd go to work tomorrow. I'd need some time.
yeah.
And
Interesting.
so there's just lots of different things that fall in, and it's just whatever's medically underwritten. So,
Okay.
what could a doctor tell you, Caleb? You need to cut back on your work. Maybe your blood pressure goes up. I need
Got
you
it.
to only work, 60 hours a week instead of 80.
Yeah. And that's where this is definitely the toughest to understand because you can't just necessarily just look at an infographic and say, "Oh, I understand this." You got to work with someone that really can take your situation because there's so many variables. I mean, just name a profession. And so appreciate that. What are some of the biggest mistakes that people make when they get DI? Because number one, not a lot of people are getting it, but the people that do get it, what are the biggest mistakes they're making?
Picking it for premium.
So finding the cheapest premium and going with that.
Yes, because when these insurance companies, and what I hear a lot of is everyone's very skeptical on insurance. They're never going to pay the claim. They're going to find something that, there's a loophole, there's this. And when I talk to them, it's putting it in, if you're the insurance company and their bare minimum for mine, at least $3 million policies on these new graduates coming out, that's a lot of money on the line for
Yeah.
them. So you want to make sure that you aren't just looking at what is it costing you? What would you
Yeah.
get back? And so trying to help them understand that. And what I did like about Jeremy, he went through the three ways, that you can look at this. You can be the ostrich and stick your head in the sand, which
Yeah.
my parents did that. It didn't work out well. If you aren't insurable or you don't have an occupation that's insurable, how are you saving
Yeah.
for yourself if it happens, and how long? I mean, a lot of these young people will tell me, well, I'm a good saver. And you're 23 years old, you don't have a spouse, you don't have kids yet, are you going to live at home forever? And then can you transfer this?
Yeah.
I have to ask them, what is their philosophy on that?
Yeah.
Because I don't talk people into disability.
Yeah.
If they start that conversation and they're just so dead set against it and they're almost in an antagonistic fight about it, I
Yeah.
just say next,
Yep.
because it's not a conversation I want to get into. I'm a firm believer in it. And if
Yep.
I'm going to take my time to have to constantly talk people into it, I'm saying yes to them and I'm saying no to the one that really
Yep.
wants the help.
Yep. This is fascinating, and I know that there's going to be future conversations, because what I'm most curious is, as we've built hundreds of models for people, we can show life events with our clients, and we could show this is what happens, and a lot of times it's until people see that they go, okay, how do I eliminate that? And when we can eliminate certain life events, like negative consequences happening, it can be a really, really powerful thing. So if you are a client of BetterWealth, um, make sure to talk to your wealth coach about this. I'm sure in meetings these will come up. You may have already had conversations, and this is something that hopefully we can, bring some light to. And also thanks to you, Heidi, you've inspired us to make a domain, betterwealth.com/income protection. It's betterwealth.com/income protection. If you want to learn more and want to talk to someone on my team about disability, go there, schedule a time, because we are really going to take this thing seriously. I mean, I feel like a lot of advisors, they say that they do this, but they really don't have a process. And that was me the first 2 years of like, yeah, I do that, but it wasn't really a part of the sales process. It wasn't part of the planning process. And now it's a big part, because we could set up a perfect plan, and then God forbid something happens to you, let's just throw all the hours that we worked on that plan together, because now it's different.
Well, and I'm in the opposite. I did all the DI first, and I wasn't taking into account really until my own career-ending injury is what else does money do for you?
Yeah.
So just like you've learned, I've learned, yeah, I can protect that. But if we haven't been building the wealth all along, and then where are we putting those dollars? Because
Yeah.
I can't help them keep more on their balance sheet if we haven't put them into the correct buckets. And so that's where the and asset comes in, because it's promise based. And me being in my 50s, that rang a huge bell in me. Can you help me create a floor?
Yeah.
And so that's where I've grown my practice, is especially with women. We want certainty. I don't want to be a burden to my kids. I
Yeah.
don't want to have to go on a budget. I don't want to be a person at Walmart greeting everyone because I don't have any money. I want the floor created and let
Yeah.
all the market based stuff. Yeah, let's go on a vacation. Let's help my grandkids with school. But I needed that certainty.
Yeah.
So I think as professionals, we always have to continue to be open and share from each other. And you've done that a lot for me.
I appreciate that. Anything else you want to talk about as it relates to income protection?
Start the conversation.
Yeah.
And just, I think people just need to be open. That's what I like about your forum. I hope for me and all of the healthcare providers I deal with,
Yeah.
I want it to be a safe place to gain knowledge,
Yeah.
to make better money decisions
Yeah.
before they need it. Because I always tell them, I
Yeah.
can't buy fire insurance if your house is already burning down. So
Yeah.
when they're calling me and I need it today, I already know that there's something that they're concerned about.
Yep.
There's a body part that hurts, and the insurance companies know that also. So
Yep.
it is something you have to make a wise decision for your present self,
Yep.
or your future self. And
Yep.
sometimes that's hard.
Yeah, that's very wise words. Can't buy fire insurance while your house is on fire. Heidi, you know how I love ending these podcasts with the legacy question, and it essentially goes like this: if this is your last day on Earth, you were with the people that you love the most, what would that conversation be? What would your last conversation be with those loved ones of yours, if you couldn't give them anything tangible other than this conversation?
My kids could probably repeat it back to you, is make wise choices with your life, your finances, your relationships, your health.
Yeah.
That's the best that I could ever pass on to them, is make wise choices.
Yep.
My clients hear it, my patients heard it. They'd always just go, Heidi, I'm going to make wise choices. That's
Yeah.
all we can do.
I think that's powerful, and it goes back into one life, live intentionally, and I think so often we take that one life for granted, and as a result, if you take your life for granted, a lot of times making wise choices doesn't matter. And so, thank you. Thank you so much for sharing that. How can people get connected with you, follow the work that you're doing, and yeah, check out what you're up to in the world?
Well, my website it's under construction, but you can still go to it, www.rdhinsurance.com. It used to stand for Registered Dental Hygienist. That's how I positioned that. My email is Heidi, Heidi, at rdhinsurance.com. Reach out to me, and I'd love to have a conversation, walk you through the process, run you some numbers so that you can make a wiser choice on if this makes sense to you.
Awesome. Heidi, thank you so much for coming on the show. I really appreciate it.
Thanks, Caleb. Keep up the good work. I got to keep running. You got to continue to be my running partner.
Do you play me at 1x speed or 1.5 or just regular?
I like it just regular.
Okay. I know some people play me at like 2x. I'm like, that's quick. So thank you.
Thanks, Caleb. Stay healthy. Have great holidays.
Thank you so much for listening to the BetterWealth podcast. It would mean the world to me if you could hit subscribe, leave a review, and share this with the people that you know and love.